Don't buy KQ shares, do this instead. Let me repeat, don't buy KQ shares yet, do this instead. I'm making this video on 17th of April. How many have checked on the shares? Yesterday, the KQ shares closed at around 7 shilling and 48 cents, down from 8 shilling and 48 cents, something like that. By the way, how many of you have realized that the KQ shares is kind of going down? It's not like the way you used to get going up and something like that. And I know some of you are wondering what might be going on. Should you buy or should you not? This is the point. And I'm going to give this answer in two ways. Don't buy KQ shares if, number one, you are looking for dividends. KQ is not paying dividends. I saw somebody asking me, hey, Joseph, I bought Kengen shares, I'm yet to see dividends. I bought KPLC shares, I'm yet to see dividends. Listen, these are companies that are struggling with debts as well as struggling with making profits. KQ made a loss of 17 billion Kenyan shilling in the year ending 2025. So as a result, dividend is usually given to the shareholders when a company makes profit. Number two, don't buy if you want a reliable valuation metrics. KQ does not have that reliable valuation metrics. For example, we are very used to calculating what we call the PE ratio when determining whether to or not to buy a share. That is not so possible with the KQ, bearing in mind that it made losses. The only parameters that we can use for the fundamental analysis is the enterprise value, which in this case, the KQ is actually capped at 46 billion Kenyan shilling. But if you look at the enterprise value of KQ is around 219 billion Kenyan shilling. What does that mean? It means that KQ, it's a capital intensive. It uses a lot of money for its operations. Get what I'm saying? So it has a lot of debts, it has some cash or cash equivalent and something like that. In other words, I'm going to use a very simple example. It's like buying a house, 22 million, but the house has a mortgage of, say, 17 billion. So the equity of that particular house is only 5 million or something like that. I'm going to share with you some of things here. Another thing, don't buy KQ shares if you dislike speculation. If you are strong holder or if you're a strong investor, you've been in this game for quite a long time and you don't like just buying because people are buying, then KQ or buying KQ may not be the ideal for you. There's some of the things I would like to share with you here when it comes to the real valuation of this company. I was actually trying to calculate the PE ratio, which was not possible. I tried also now to go through what we call the enterprise value to check how much this company uses in terms of operations and what have you, which actually enterprise value means the market capitalization plus the total asset, total debt plus preferred equity and all those combined together. There's something I would like to share with you here. Yesterday, that is on 16th of April 2026, the share hit the low of 7.48, which is clearly a sign of a pullback. What is a pullback? Investors are locking in their gains. It's only you who bought the KQ shares without an exit strategy. You should always have an exit strategy. What is an exit strategy? Is you buy shares, obviously you target the entry point and an exit point. You see, an increment of 0.5 shilling in a share, it's a good amount of money. Well, if you invested a good amount of money. What do I mean by good? Good is relative, depends with who. So the point here is, right now what we are witnessing, it's KQ on its lowest, let's say, in the last 1 week or so, of 7.48 Kenyan shilling. People are selling their shares. Not all of them, but good number of people who have already realized their profit are selling of their shares. Some bought these shares at around 4 shilling. Yesterday, not yesterday, the other day, that's the 15th, actually shares hit 8 shillings, 8.48 shilling. That means that they had already doubled their investment. And they're exiting the market. I had some client whom I was guiding and they were telling me, Joseph, I'm sending an order to buy shares, but I'm not getting any. What could be the issue? All right, there was no supply. You realize that there are no people willing to sell the shares. People are still holding on. But that one I realized is easing, is going down. People are now willing to sell their shares out there. Good. Now, let's do something here, which is quite interesting. Am I overly saying that the KQ share should not be bought? No. What I can tell you to do is you check out on what we call the intrinsic value of this company. Truly, the KQ is at a discounted price. For example, if we do the real valuation of that company, we realize that the share is trading around 9 shilling, but we are at around 7 shillings. So we are still 2 shillings down its real value. But what happens if you were to buy the KQ shares, you're not really buying the performance of this particular company. By the way, for your information, the profit that the KQ realized last year was not solely from the operations, was actually from the currency valuation. So when it comes to the performance of the KQ, the real performance is not really pleasing. It is still on losses. It is not making a substantive gains or profits. So what people are buying now are buying the speculation of the KQ is looking for an investor, and the government is really doing the best it can to actually get this investor so that it can bail out this company. And they're looking around $2 billion, which is a huge chunk of cash. Talk about over 200 billion Kenyan shilling. That is real money. So once these investors look, and by the way, I am positive they're gonna get these investors, whether locally or international or foreign, they'll get this particular investor. And once that happens, then I can tell you this will be a game changer. Number two, invest in KQ if you are largely a short. Let me show you something here. Invest in KQ if you are largely a short-term investor, meaning you're looking for capital gain. Buy low, sell high. But if you're a long-term investor, may not so mean good because we don't have the fundamentals to actually use to analyze this so that we can substantiate why we should buy this share. By the way, if you ask me, why are those shares actually short from lows of 4 to 8.48 shillings or something like that? Simple, we all know the reason. Because Dendenyoro bought these shares. But you see, he has not come out and tell us, hey, why he actually bought those shares. But obviously, we don't need to wait him to tell us. We can see, we can do all these analysis and be able to determine whether it is worth or not worth to buy those shares. So as a result, therefore, it tells you these companies, it's actually appreciating in its value based on the speculation of what exactly people saw our wonderful and great leader did. So buy these shares if you understand volatility. This up and down thing. But there's something, before I even continue on that, there's something I actually realized about this company, which is quite interesting. Despite this company registering losses, I would like us to look at the analysis from 1997 up to date. Since March 4th of 1997, KQ shares market cap has increased from 4 billion all the way to 42 billion, or let's say 42, 46, around there. That's an increase of around 958%, or an annual growth of around 8.43%. See, if you zoom out from the KQ shares, you'll actually realize it's on an upward trajectory in terms of the market capitalization. But if you zoom in into the smaller details, you'll see a lot of noise. Going down, going down. That's why I always tell people, if you would like to buy these shares long term, based on the government is looking for an investor to bail out this company, on top of that, you're good to go. But if you're a speculator, this is can be an issue. Okay? Now, there's something I would like you to check here. Buy if you want a turnaround upside down. And lastly, buy if you can handle drawdowns, because we are having a lot of drawdowns here and there. If you can handle that, if you have the ability, then you can go ahead and invest. If I had 100,000 that I want to buy shares today and I'm getting into the stock market, I would put my all 100,000 into that. I will go there with around 15,000 or 20,000, and then the rest perhaps maybe I can check on other companies that are actually has what we call stable analysis or something like that. But it depends exactly. So for those who are buying the KQ shares, are not really buying the dividends. They are not, because there are no dividends with KQ. And by the way, if you ask me, I don't see the dividends comes that soon. And if they will come in tunes of 0.8 shillings, less than 1 shilling probably. So if you're buying based on the dividends, there is no dividends in KQ. And if it were there, then it would be substantive. For example, let's check the example of KPLC. The KPLC shares, they pay dividends, yes, but look at how much they pay per share. Too low, all right? Now, what is my verdict? My verdict is this. It's still a company worth to be bought if you actually understood those things that I've shared. But if you're out there and you do not understand much about volatility and all those drawdowns, please stay away from it. Again, I always tell you calculate things to do with what we call the PE ratio and what have you. We don't have that because the company is not really making profits. Are we together? Now, what happens is, if I can read you some things here, technical chart analysis next. Let me not go through this one. It's a bit deep and might actually take a lot of time to go through it, but I've actually shared with you some of the information, what's happening with the KQ. So the ultimate point here is, should you or should you not buy? Well, I have not seen any substantive reason as to why you should just buy the KQ shares, because we don't have the PE ratio to calculate that. We don't have some other fundamentals unless you're buying these KQ shares for the purposes of long term. You see, reason why I had told you to buy these shares way earlier, I saw some potential capital gain increment, but some of you did not get. A lot of you are getting this information when it's people are now getting their profits out. What I can say is, we are hoping, by the way, funny thing is that you're praying it goes up, I'm praying it goes down. If it goes down, say to 4 or 5 shillings thereabout, still can actually open door for what? For buying more. But if you had bought, you can wait a little bit, goes down, pull back a little bit, and then you can actually, we call it the average down your shares, and then you can progress from there. But if you're a long-term investor, you love stability, you don't like volatility and all those kind of things, you might actually reconsider buying the KQ shares unless you're buying its future, not its present. And obviously, in most cases, when we are buying shares, we buy the future of the company, not necessarily its present. If then that is the case, you can go ahead and buy. But remember one thing, this is a company that has a lot of debt. As you can see, the enterprise value is at the zones of 219 billion Kenyan shilling with a market cap of 42 billion. So the difference of around 170 something billion, it's actually, well, minus, let's say, the cash that they have in their coffers or something like that. The rest is sort of like debts and something like that. All right. First of all, you realize one thing. We rarely get the PE ratio when we are calculating in businesses such as the airlines, and telcos, and what have you, and technologies. We don't use that because it's hard to get. So what you do, you buy it's the future potential of that particular company. And in this case, then you can buy the KQ shares if you understand those fundamentals. Because some of you be like, oh, you told us to buy, now you're telling us not to buy. No, I'm saying it depends with the type of an investor you are. But if you're just buying anyhowly without non-understanding, and then one day you ask me why am I not getting any dividends, then you're not doing it in the right manner. This is good, Joseph. At all the time, try the best I can to make sure that I come here, share all this information so that at least you get something. But the point here is, let's all invest. Let's do something. We have a lot of companies on the not KQ, on the Nairobi securities that we can invest and get something. Are we together? If you need my services in one way or the other, you can go ahead and pick that number of mine, shoot me a text or a call, and we talk business. But for now, it's a goodbye and see you in the next one.